Madam Speaker, I shall now present my tax proposals. India's tax to GDP ratio is very low, and the proportion of direct tax to indirect tax is not optimal from a point of view of social justice. I place before you certain data to indicate that our direct tax collection is not commensurate with the income and expenditure pattern of Indian economy. As against an estimated 4.2 crore people engaged in the organized sector employment, the number of individuals filing returns for salary income is only rupees 1.74 crores. As against 5.6 crore informal sector enterprises and firms doing business in India, the number of returns filed in this category are only 1.81 crores. Out of 13.94 lakh companies registered up to 31st March 2014, 5.97 companies have filed their return for assessment year 2016-17. Of 5.97 lakh companies which have filed their return for assessment year 2016-17, as many as 2.76 lakh companies show losses or zero income. 2.85 lakh companies have shown profit before tax less than 1 crores. 28,667 companies have shown profit between 1 to 10 crores, and only 7,781 companies have shown profit before tax more than 10 crores. Now, individuals. From amongst 3.7 crore individuals who filed tax returns in the year 2015-16, 99 lakhs showed income below the exemption limit of 2.5 lakhs. 1.95 crore show income between 2.5 lakhs to 5 lakhs. 52 lakhs show income between 5 lakhs to 10 lakhs, and only 24 lakh people show income above 10 lakhs. Thus, out of 76 lakh individual assessee who declare income above 5 lakh, 56 lakhs are in the salaried class. यानी 76 लाख लोग 5 लाख से अधिक इनकम डिस्क्लोज करते हैं साल की, जिसमें से 56 लाख वेतनभोगी हैं, बाकी सिर्फ 20 लाख हैं व्यापार, व्यवसाय, प्रोफेशनल सब मिला के. The number of people showing income more than 50 lakhs in the entire country is only 1.72 lakhs. We contrast this that in the last 5 years, more than 1.25 crore cars have been sold. And the number of Indian citizens who traveled abroad, either for business or tourism, was 2 crores in the year 2015. From all these figures, we can conclude that we are largely a tax non-compliant society. The predominance of cash in our economy makes it possible for people to evade taxes. When too many people evade taxes, the burden of their share falls on those who are honest and tax compliant. After demonetization, the preliminary analysis of the data received in respect of deposits made in the old currency presents a revealing picture. During the period 8th November to 30th December 2016, deposit between rupees 2 lakhs and 80 lakhs was made in 1.09 crore bank accounts. And that was an average deposit of rupees 5.03 lakhs. Deposits of more than 80 lakhs was made in 1.48 lakh bank accounts. That the average size of the deposit was 3.31 crores. This data mining will help us immensely in expanding the tax net as well as increasing the revenues, which was one of the objects of demonetization. Madam Speaker, one of our main priorities of our government is to eliminate black money component from the economy. We are committed to make our taxation rates reasonable, our tax administration more fair, and expand the tax base of the country. This approach will change the color of money. नई दुनिया है, नया दौर है, नई है उमंग. नई दुनिया है, नया दौर है, नई है उमंग. कुछ थे पहले के तरीके तो कुछ हैं आज के रंग ढंग. रोशनी आके अंधेरों से जो टकराई है, काले धन को भी बदलना पड़ा आज अपना रंग. The net tax revenue of 2013-14 was 11.38 lakh crores. This grew by 9.4% in 14-15 and 17% in 15-16. As against an RE of 2016-17, we will end the year with a higher growth rate of 17% for the second year in a row. 2 साल लगातार 17% increase है. Because of serious efforts made by the government, the rate of growth in advance tax, in personal income tax, in the last 3 quarters of the current financial year is as high as 34.8%. मैडम, ये डिमोनेटाइजेशन का भी असर है कि पर्सनल इनकम टैक्स लोगों को ज्यादा डिस्क्लोज करना पड़ रहा है. 34.8% इंक्रीज इस देश के इतिहास में कभी नहीं हुआ. मैडम स्पीकर, द thrust of my tax proposal in this budget is to stimulate growth, relief to the middle class, affordable housing, curb black money, promote digital economy, bring transparency in political funding, and simplification of tax administration. Measures for promoting affordable housing in the real estate sector. In my budget proposals last year, I had announced a scheme for profit-linked income tax exemption for promoters of affordable housing scheme, which has received a very good response. However, in order to make this scheme more attractive, I propose certain changes in the scheme. First of all, instead of a built-up area of 30 and 60 square meters, the carpet area of 30 and 60 square meters will now be counting. इससे 30% size बढ़ जाता है affordable housing का. Also, the 30 square meter will apply only in case of municipal limits of 4 metropolitan cities, while the rest of the country, including the peripheral areas of metros, limit of 60 square kilometers will apply. In order to be eligible, the scheme 60 square meter, I'm sorry, I stand corrected, 50 meters will apply. In order to be eligible, the scheme was to be completed in 3 years after commencement. I now propose to extend it to 5 years. At present, the houses which are unoccupied after getting a completion certificate are subject to tax at a notional rental income. For builders for whom constructed buildings are stock in trade, I propose to apply this rule only after 1 year at the end of the year when a completion certificate is received, so that they can get some breathing time for liquidating their inventory. We also propose to make a number of changes in the capital gain tax provision in respect of land and building. The holding period for considering gain from immovable property will be, in the long term, is 3 years. This is now proposed to be reduced to 2 years. After the base year for indexation is now proposed to be shifted from 1/4/81 to 1/4/2001 for all classes of assets, including immovable property. This move will significantly reduce the capital gains tax liability while encouraging mobility of assets. We also plan to extend the basket of financial instruments to which the capital gains can be invested without payment of tax. For joint development agreements signed by the development of property, the liability to pay capital gains tax will arise only in the year the project is completed. The new state capital for the state of Andhra Pradesh is being constructed by an innovative land pooling mechanism without use of the Land Acquisition Act. I propose to exempt capital gains tax persons holding land from 2/6/14, the date on which the state of Andhra was reorganized, and whose land is pooled for the creation of capital city under the government scheme. A concessional withholding rate of 5% is being charged on interest earned by foreign entities in the external commercial borrowings or in the bonds in government securities. This concession is available till 30th June 2017. I propose to extend it till 30th June 2020. This benefit is also extended to the rupee-denominated masala bonds. The government gave income tax exemption to startups with certain conditions last year. For the purpose of carrying forward losses in respect of such startups with conditions, continuous holding of 51% of voting rights has been relaxed, subject to the condition that holding of original promoters continues. Also, the profit-linked deduction available to startups for 3 years out of 5 years is now being changed to 3 years out of 7 years. Minimum alternative tax is at present levied on advance tax. There is a strong demand for abolition of MAT. Although the plan for phasing out exemptions will kick in from 1/4/2017, the full benefit of revenue out of the phase out will be available to government only after 7 to 10 years, when all those who are already availing exemptions at present complete their period of availment. Therefore, it is not practice to remove MAT at present. However, in order to allow companies to use MAT credit in future, I propose to allow a carry forward of MAT for a period of 15 years instead of 10 years at present. In my budget proposals of 2015, I had announced that I would bring down corporate rate down to 25% gradually. In budget 2016, I had announced a reduction by 1% in the case of those companies whose turnover was less than 5 crores. In the same budget, I had also announced that new manufacturing companies which do not avail any exemption could be charged only 25%. Medium and small enterprises occupy the bulk of economic activity and are also instrument in providing maximum employment to people. However, since they do not get many exemptions, they end up paying more taxes as compared to large companies. As per data of the financial year 2015-16, 2.85 lakh companies making a profit of less than 1 crore, effective tax rate was 30.26, while 298 companies making a profit of 500 crores pay an effective rate of only 25.90. In order to make MSME companies more viable and to encourage firms to migrate to the company format, I propose to reduce income tax for smaller companies with an annual turnover up to 50 crores to 25%. तो जितनी भी कंपनीज 50 करोड़ तक की टर्नओवर है उनका 5% टैक्स कम किया जाएगा. As per the data of assessment year 2015-16, there are 6.94 lakh companies filing returns, out of which 6.67 lakh companies fall in this category. Therefore, percentage-wise, 96% of India's companies will get the benefit of this lower taxation. This will make our MSME sector more competitive as compared to larger companies. The revenue foregone in this measure is expected to be 7,200 crore per annum. In order to give a boost to the banking sector, I propose to increase allowable provisions of non-performing assets from 7.5% to 8.5%. This will reduce the tax liability of banks. I also propose to tax interest receivable on actual receipts instead of accrual basis in respect of NPA accounts of all non-scheduled banks. Cooperative banks also at par with scheduled banks. This will remove hardship of having to pay tax even when interest income is not realized. Considering the wide range of the LNG as a fuel as well as a feedstock for petrochemical sector, I propose to reduce the basic customs duty on LNG from 5% to 2.5%. In order to incentivize domestic value addition and promote Make in India, I propose to make changes in the custom and central excise duties in respect of certain items which are given in the annexure of my speech. Some of the problems addressed are addressing the issue of duty inversion. There are promoting digital economy. There is a scheme of presumptive taxation for small and medium taxpayers whose turnover is up to rupees 2 crores. At present, 8% of their turnover is counted as presumptive income. I propose to make this 6% in respect of a turnover which is received by non-cash means. The benefits will also be applicable for transactions undertaken in the current year also. I propose to limit the cash expenditure allowable as deduction both for revenue as well as capital expenditure to 10,000 rupees. Similarly, the limit of cash donation which can be received by a charitable trust is being reduced from rupees 10,000 to 2,000. The special investigating team set up by the government for black money has suggested no transaction above 5 lakhs, The special investigative team set up by the government for black money has suggested that no transaction above rupees 3 lakhs should be permitted in cash. The government has decided to accept this suggestion. Suitable amendment in the Income Tax Act is proposed in the finance bill for enforcing this decision. To promote cashless transaction, I propose to exempt BCD excise duties, CV duty, SAD on miniaturized POS card readers, and MPOS micro ATM standards for version 1.5.1, fingerprint readers, scanners, and iris scanners. Simultaneously, I propose to exempt parts of components of manufacture for such devices so as to encourage the domestic manufacturing of these items. My next item, Madam, concerns all of us. It deals with transparency in political funding. India is the world's largest democracy. Political parties are essential ingredient of a multi-party democracy. Even 70 years after independence, the country has not been able to evolve a transparent method of funding political parties, which is vital to the system of free and fair elections. An attempt was made in the past by amending the provisions of Representation of People's Act, the Companies Act and the Income Tax Act to incentivize donations to individual partnership firms, HUF and companies to political parties. Both the donor and the donee were granted exemption from payment of tax if the accounts were transparently maintained and returns were filed with the competent authorities. Additionally, a list of donors who contributed more than rupees 2,000 to any party in cash or check was required to be maintained. 20,000 by who donated 20,000 to any party in cash or check was to be maintained. The situation has only marginally improved since these provisions were brought into force. Political parties continue to receive most of their funds through anonymous donations, which are shown in cash. An effort therefore requires to be made to cleanse the system of political funding in India. Donors have also expressed reluctance in donating by check and other transparent methods, as it would disclose their identity and entail adverse consequences. I therefore propose the following system as an effort to cleanse the system of funding of political parties. A. In accordance with the suggestion made by the Election Commission, the maximum amount of cash donation that a political party can receive will be 2,000 from any one source. B. Political parties will be entitled to receive political parties will be entitled to receive donations by check or in the digital mode from their donors. C. An additional step, as an additional step, an amendment is being proposed to the Reserve Bank of India Act to enable the issuance of electoral bonds in accordance with a scheme that the Government of India would frame in this regard. Under this scheme, a donor could purchase bonds from authorized banks against checks and digital payment only. These would be redeemable only in the designated account of a registered political party. These bonds will be redeemable within a prescribed time from the issuance of the bond. Every political party would have to file its returns within the time prescribed in accordance with the provisions of the Income Tax Act. Needless to say, the existing amendments to political parties from payment of income tax would be available only subject to the fulfillment of the above conditions. This reform will bring greater transparency and accountability in the political funding while preventing future generation of black money. Ease of doing business. As an anti-avoidance measure, the provision of domestic transfer pricing in respect of related entities was brought in by the Finance Act 2012. Since the number of entities being covered under the domestic pricing has gone up substantially, necessitated a longer scrutiny, which causes hardship to domestic companies. In order to reduce the compliance burden due to the domestic transfer pricing provision, I propose to restrict the scope of domestic transfer pricing only if one of the entities involved is a related party transaction enjoying specified profit-linked deduction. I propose to increase the threshold limit for audit of business entities who opt for presumptive income scheme from 1 crore to 2 crores. Similarly, the threshold for maintenance of books of individuals and HUF is being increased from a turnover of rupees 10 lakhs to 25 lakhs or income from 1.2 lakhs to 2.5 lakhs. In 2012, the Income Tax Act was amended to provide for taxation of those transactions for transfer of shares or interests in foreign entity deriving its value substantially from Indian assets. Apprehensions have been raised about some difficulties which are arising because of the provisions in the case of transfer of stake of investors of India-based funds located abroad but investing in India-based companies. In order to remove difficulties, I propose to exempt foreign portfolio investors category 1 and 2 from indirect provisions, indirect transfer provisions. I also propose to issue a clarification that indirect transfer provision shall not apply in the case of redemption of shares or interests outside India as a result or arising out of the redemption of sale or investment in India, which is chargeable to a tax in India. As of today, a TDS of 5% is deducted from the commission payable to individual insurance agents, even if their income of some of them is well below the taxable limit. I propose to exempt them from the requirement of TDS, subject to the filing of their filing a self-declaration that their income is below taxable limits. Last year, I had announced a new scheme for presumptive taxation of professionals with a receipt of 50 lakh per annum. In respect of such assessees, they are being given the benefit in terms of payment of advance tax in one installment instead of 4. In order to allow people to claim refund of expeditiously, the time period of revising a tax return is being reduced to 12 months from the completion of the financial year at par with the time period of filing the return. At the same time, completion of scrutiny assessment is being compressed further from 21 months to 18 months for the assessment year 18-19 and 12 months for the assessment year 19-20. I now come to an important change in the personal income tax. While the government is trying to bring within its tax net more people who are evading taxes, the present burden of taxation is mainly on the taxpayer and the salaried employees who are showing their income correctly. Therefore, post-demonetization, there is a legitimate expectation of this class of people to reduce their burden of taxation. Also, an argument is made that if nominal rate of taxation is kept at a lower slab, more people will prefer to come within the tax rate. I therefore propose to reduce the existing rate of taxation for individual assessees between the income 2.5 lakhs to 5 lakhs to 5% instead of the present rate of 10%. This would reduce the tax liability of all persons below rupees 5 lakhs income either to zero with a rebate or 50% of their existing liability. In order not to have any duplication of benefit, the existing benefit of rebate available to the same group of beneficiaries being reduced to 2,500 available only if to the assessees with income up to 3.5 lakhs. The combined effect of both these measures will mean that there would be a zero tax liability for a person getting income up to 3 lakh rupees and a tax liability of only 2,500 for people with an income of 3 to 3.5 lakhs. If limit of rupees 1.5 lakhs under section 80C investment is used fully, tax would be zero for people with an income up to rupees 4.5 lakhs. While taxation liability of people with income up to 5 lakhs is being reduced to half, all other categories of taxpayers in the subsequent brackets will also get a uniform benefit of 12,500 per person. The total amount of tax foregone on this account of measure is therefore 15,500 crores. In order to make good some loss of revenue on account of this relief, I propose to levy a surcharge of 10% of tax payable on this category of individual whose annual taxable income is between 50 lakhs and 1 crore. The existing surcharge of 15% on people earning more than 1 crore will continue. This is likely to give me an additional revenue of rupees 2,700 crores. In order to expand the tax net, In order to expand the tax net, I plan to have a simple one-page form to be filed as an income tax return in the category of income individuals having a taxable income up to rupees 5 lakh other than business income. Also, a person of this category who files an income tax return for the first time would not be subject to any scrutiny for the first year unless there is some specific information available with the department with regard to any high-value transaction. I appeal to all citizens of India to contribute to national building by making a small payment of 5% of tax if their income falls in the lowest slab of 2.5% to lakhs to rupees 5 lakhs. Some other important amendments in the tax laws which are not covered in my speech are given in Annexure 3 to this budget. There has been a substantial progress towards ushering the GST by far the biggest tax reform since independence. Since the enactment of the Constitution 101st Amendment Act 2016, the preparatory work of the path-breaking reform has been a top priority for the government. In this context, several teams of officers, both of the state and the Central Board of Excise and Customs, have been working tirelessly to give finishing touches to the model GST law and the rules and other details. Government on its part has promptly given effect to various provisions of the Constitution Amendment, including constitution of the GST Council. Since then, the GST Council has had 9 meetings to discuss the various issues relating to the GST, including the broad contours of the GST tax rate, threshold exemption, and parameters for the composition of details of compensation to the states due to implementation of the GST, examination of the draft model GST law, draft IGST law, and the compensation law and the administrative mechanism for the GST. It is my privilege to inform the August House that the GST Council has finalized its recommendation on almost all issues based on consensus and after a spirited debate and discussion. The preparedness of the IT system of the GST is also on schedule. The extensive reach-out effort to the trade and industry will start on the 1st of April 2017 to make them aware of the new taxation system. Through the Central Board of Excise and Customs shall continue to strive to achieve the goal of implementation of the GST as per schedule without compromising the spirit of cooperative federalism. Implementation of the GST is likely to bring more taxes both to the centre and the state because of widening of the tax net. I have preferred not to make many changes in the current regime of excise and service tax because they are to be replaced by the GST very soon. In the annual conclave of tax officers called Rajastha Gyana Sangam, held in June 2016, the Prime Minister had expressed his desire to bring reforms in the tax administration in the approach of RAPID, which stands for Revenue Accountability, Probity, Information and Digitization. This approach precisely reflects the strategy of the tax department, which it has now formulated. For revenue considerations always remain the focus of the Revenue Department, we are trying to bring the maximum use of information technology to remove the human contact with the assessee as well as to plug tax avoidance. We will try and minimize our efforts for e-assessments we will try and maximize our efforts for e-assessment in the coming year. We are also using a lot of data mining capability both in-house and outsourced. We plan to enforce greater accountability on the officers of the tax department for specific acts of commission and omission. I would like to assure that the honest tax compliant would be treated with dignity and courtesy. Madam, my tax proposals for the exemptions would result in a loss of rupees 22,700 crores, but after counting the revenue gain of rupees 2,700 crores for additional resource mobilization, the net revenue loss in direct tax could be 20,000 crores. There is no significant loss or gain on account of my indirect tax proposals. Madam Speaker, I have outlined in the budget proposals under an overarching agenda, transform, energize and clean India. Our emphasis will now be on implementing all these proposals for the benefit of farmers and the poor and the underprivileged sections of our society. Madam Speaker, it is said, when my aim is right, when my goal is in sight, the winds favor me and I fly. There is no other day which is more appropriate for this than today. With these words, Madam, I commend the budget to this Honorable House.
Yes, Minister, to table the statement. Item number 2. Yes. Lay the table. Statement.
Madam, I rise to lay on the table of the House the following statements under Section 3 of the Fiscal Responsibility and the Budget Management Act 2003, Macroeconomic Framework Statement, Medium-Term Fiscal Policy Statement, and Fiscal Policy Strategy Statement.